Hello, everyone, and welcome back. The market is currently closed, but we're looking at a very interesting setup for Strive Inc., trading under the ticker ASST on the NASDAQ. The stock closed its last session at 87 cents. While that small gain may look quiet, the intraday movement told a very different story, dipping as low as 83.56 before bouncing back. That kind of volatility signals a tug-of-war between retail exhaustion and institutional positioning, especially for a company that has reshaped its identity over the past few months. Many investors still see Strive as a small-cap asset manager. At a sub-dollar price, it's easy to dismiss as a penny stock, but the reality is different. Strive has effectively transformed itself into a public Bitcoin treasury company, more like MicroStrategy than a traditional asset manager. The $118.8 million preferred stock offering, priced at $90 per share, is not just to survive, it's being used to accumulate Bitcoin aggressively and retire debt from the acquisition of Semler Scientific. This disconnect between the asset manager label and the crypto treasury reality explains why trading volume surged to nearly 77 million shares in a session. Recent swings were triggered by fears of dilution due to the 12.25% dividend on preferred shares. Retail reacted nervously, but institutional filings tell a different story. Firms like Citadel and Jane Street increased positions dramatically, showing confidence in the long-term strategy. Strive now blends traditional investment with a clear capitalist mandate. Its engine is fueled by digital assets, and ASST trades more like a high-beta Bitcoin proxy than a financial services stock. The company reports preliminary year-end Bitcoin holdings of over 7,500 BTC, valued at hundreds of millions of dollars, while market cap is around $1.1 billion. Originally, Strive focused on pro-capitalism ETFs and mutual funds. The real shift came in mid-2025 with mergers and acquisitions. Today, social media and content services are secondary. The main goal is maximizing Bitcoin per share. Institutional activity shows smart money focuses less on the current 87-cent price and more on the net asset value of Bitcoin holdings. Currently, Strive operates at a loss, with trailing EPS around negative 468 cents, but this doesn't account for Bitcoin appreciation. The real question is whether this Bitcoin for equity model can succeed. Upcoming catalysts include the February 24th earnings report, which will reveal the post-acquisition balance sheet. If Bitcoin accumulation outpaces dilution, the stock could retest $1.50. Global trends favor hard assets, and ASST could benefit if seen as a cheap gateway to managed Bitcoin exposure. Risks remain. If AST fails to hold 80 support, a slide toward the 38 and 52-week low is possible. Cash on hand is $67.6 million, but burn rate is high. Success of the preferred stock offering is critical to reduce debt and strengthen the balance sheet. In short, Strive is no longer the company it was a year ago. Retail is selling, institutions are accumulating, and the next few weeks leading to earnings will be decisive. If their Bitcoin treasury strategy works, today's sub-dollar price could look like a historical anomaly. If not, the cost of capital could weigh heavily. This is a bold, high-conviction play in a market rewarding aggressive treasury strategy.